Good afternoon, Campbell McCreary, Amvest Capital in New York City. Today we're highlighting Global Energy Metals Corp. Global Energy trades on the venture as GEMC and as GBLEF on the OTCQB. So again, that's GEMC on the venture and GBLEF on the OTCQB. Hope you'll enjoy today's program. It'll also be available in replay mode about an hour after we wrap up, and go straight to amvestcapital.com/replays, and you'll be able to see it and share it as you wish. Do feel free to send in your questions. Put them in on the question pane at GoToWebinar, and we'll incorporate them into our line of questions. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. And as always, this call is for informational purposes only. We're pleased to have with us today Mitchell Smith, making you presenter, Mitchell, President and CEO of Global Energy, an early adopter and thought leader in the battery space, and has negotiated and structured offtake agreements for cobalt material and built relationships with Chinese battery manufacturer intermediaries, and facilitated commerce by arranging joint ventures, marketing and engineering and procurement construction contracts. He's also director of Spectra Ventures and Panther Metals. So, if you want to turn on your webcam and share your screen, we'll get started.
Great, thank you very much, Campbell. Appreciate that.
Just pull up your presentation. It's not up yet. There we go. Okay, you have the floor.
Excellent. Well, thanks again very much. I really appreciate this. Good afternoon, everyone. As Campbell mentioned, I'm Mitchell Smith. I'm President and CEO of Global Energy Metals Corporation. I just want to take a quick moment here to thank Campbell and the Amvest team for making this all possible, and also all of you for participating here today. So I really look forward to sharing the Global Energy Metals vision and really illustrate how we as shareholders can benefit from our investment exposure to the battery supply chain. And I think benefit and profit is something that I think is one of the reasons why we're all on this call here today, and it's to make money. And I think that's probably a good time to preface that we're now live on a financing at 25 cents. It comes with a full warrant at 30 cents. We just announced closing $870,000 in a first tranche, but certainly welcome your involvement in the second tranche close should it be of interest after hearing about our company today. So before I get ahead of myself here too much, I should probably share this disclaimer slide, and I'm sure everyone's familiar with this, but I do need to show it as it keeps the lawyers and regulators happy when I do. So let me introduce you to Global Energy Metals and how it provides our shareholders with exposure to the electrified future. Global Energy is founded by a team that spent over a decade advocating for a greener economy. It's a team that really recognizes that we're in midst of a radical transition in how we power our cars, heat our homes, and really generate and store energy. And it's this change or this movement that's really translating into an increase in global demand for raw materials and resources at an unprecedented scale. It's exposure to nickel and cobalt and copper and other metals that are critical to the key technologies of the electric revolution and energy storage markets that we believe is going to be one of the largest investment opportunities of this century. Now, the shift to electric mobility and new forms of clean energy storage is going to require trillions of dollars in spend. I heard a report this morning that says it's going to require $1.7 trillion in mining in the next 15 years to help supply enough copper, cobalt, nickel, and other metals that are needed to shift the world to a low carbon economy. And there's this looming mismatch that's really happening between the world's strengthened climate ambitions and the availability of the critical metals that are essential to realizing these very ambitious goals. Now, as the graph on the left suggests, the global clean energy transition will have really far-reaching consequences for mineral demand over the next several decades. And we're really strong believers that prices for these commodities are heading significantly higher on bullish fundamentals. We see this as a decade of electrification, and with it comes the need for secure supply of the raw materials that make it possible. Now, as many of you can appreciate, this doesn't come without significant challenges. And the global resource sector, including the battery metals subsector, has been really punished significantly over the past several years. And juniors in the green and battery metal space still face these really high financing hurdles, even in light of the ongoing energy transition and focus on decarbonization. And it's these high quality resource projects in safe, pro-mining jurisdictions that are just not being advanced in a timely manner. Average mine grades are declining. It requires much higher amounts of mined ore to be processed to reach the same level of concentrate output. And of course, the demand is booming. So we've got these supply constraints. We've got growing demand and prices that are accelerating. But this creates an opportunity, and it's what I like to call the global energy metals opportunity. We recognize that the proliferation and growth of the electrified economy in the coming decades is really underpinned by the availability of these battery metals. So to be part of the solution and respond to the way we source, use, and store energy, Global has taken a consolidate, partner, and invest approach. And in doing so, we've been able to assemble and are advancing a portfolio of very strategically significant investments in battery and technology metal resources. By applying our team's financial, technical experience and transactional know-how, we're capturing the opportunity of this underlying electrification movement, where battery demand and pricing are, like I said, are accelerating to new levels as the EV and grid scale electricity storage adoption really strengthens. Now, we see the 2020s as being like no other for energy metals, and Global Energy plans to capitalize on this mega trend opportunity by paving a path forward for our shareholders to get maximum investment exposure to the battery supply chain. So we're going to use that experience to really be part of this and create value for our shareholders. And we're going to build upon the existing project stakes, deploy fresh capital, and leverage share equity to make accretive acquisitions, establish new partnerships, and assemble and develop a portfolio of high quality, high upside investments. So this is a company that has been really built with shareholders in mind. And now, although our model isn't unique, it's been proven time again by our own team, by our management, our board, and our seasoned strategic advisors. And we're doing it with a skin in the game approach, with very strong insider ownership within what is really a very tightly held share structure altogether. Now, a company is only as good as the people that are within it, and fortunately, I can say that our team has the discipline and the talent that's really required for success. We have deep connections in the battery and energy storage markets. We have a track record of successfully discovering future disruptors in the markets, and it's our team's collective ability to identify, action, and capitalize on these opportunities and given years of experience in the space, utilize this expertise to make calculated investments specifically in battery metal resource projects. As we've demonstrated already with our current project portfolio of copper, nickel, and cobalt projects, we're looking to invest, explore, and develop prospective, scalable assets in established mining and processing jurisdictions that are in close proximity to end-use markets. And this is especially topical today, given countries across the globe are demanding localized regional supply of raw materials and their processing and manufacturing of those materials into end products. It's the very reason we took a strategic interest in the Rana and Bruvan nickel mines in Norway. That's a country that is continuing to lead the charge in electric vehicle adoption, but it's also leveraging its plentiful renewable energy sources to establish a European presence as a sustainable battery manufacturing hub. It's why we are expanding our footprint in North America with recent acquisitions of very prospective copper, silver, and nickel, cobalt, copper exploration projects in Idaho and Quebec. And of course, why we're 100 miles or 150 kilometers from the world's largest EV battery manufacturer in Nevada. So, we're taking an approach of targeting projects with low logistics as well and processing risks, like we've done with our Millennium cobalt copper project in Queensland, so that they can really be fast tracked to enter the supply chain during this growing battery storage cycle. And something else that was very much part of our mandate is to collaborate with other peers in the industry and strengthen our exposure to these critical commodities and technologies that are required for a clean future. As an example of this, we hold a sizable equity stake in Electric Royalties. They're a TSXV listed company. Through a royalty sale we did with them not so long ago on our Queensland portfolio. And not only do we get that equity stake in their company, but it also provides our shareholders with a way to participate in an aggressive and rapidly growing company and get focus on minerals that are not necessarily in our portfolio. So I'm not going to spend too much time speaking to each of the projects, just because we only have obviously so much time available here today. But what I would like to do is I'll give a brief synopsis of each and just kind of highlight the upside that they each bring to the company. So let me start with our Australian portfolio, flagship Millennium Cobalt Copper project. It provides us some jurisdictionally safe investment exposure to a growth stage exploration and development property. It's located in the famed Mount Isa region of Queensland, Australia. It's located well in very close proximity to established mining, transport, processing infrastructure, along with a very good skilled workforce. And of course, direct shipping to the world's largest battery manufacturing hub in Asia. It has a JORC resource in place, and we believe that there's excellent potential for further upside in extending the known cobalt, copper, gold mineralized structure through additional exploration work. And it's open at strike to the north and to the south. We also hold two earlier stage projects called Cobalt Ridge and Mount Dorothy, and these give us a very strong positioning in the Queensland Mount Isa Cloncurry region. And as a cobalt explorer, we have some of the most prospective land in that region. We're working with peers in the industry, and we have discussions underway with several groups right now to see if there's an opportunity to align with them and bring in a strategic partner to bring Millennium to a production decision and further explore the collective Mount Isa projects. Now our Nevada projects, Lovelock and Treasure Box, and these are really going to be the focus for the company moving forward here in the foreseeable future, in the near future. And this is really a prime example of being at the right place at the right time. You know, I think we can all agree that it doesn't get much better than being in Nevada for you know, a superior mining jurisdiction. And it's, of course, also a perfect time to be advancing a battery minerals project in North America, given the recognition of the importance of critical mineral independence that the U.S. is really placing on the mining industry. So, you know, where better to make a discovery than at a project that historically had limited yet high-grade production of cobalt, nickel, and copper. You know, it produced at the turn of the last century exceptional grades, 14% cobalt, 12% nickel, which, you know, is just really unheard of. So, you know, we're about to commence the first phase of an inaugural drill program at the Lovelock mine. And that'll come, you know, very soon after our closing of the financing. This program, it's going to call for approximately 8 holes, which translates to about 1,400 meters, and it's going to initially target some areas of high chargeability that were on IP studies that we did and geophysical anomalies that we identified in a recent interpretation of airborne mag survey that we did on the property. So, you know, importantly, this first pass drilling program, it's going to it's intended to confirm the cobalt, nickel, copper mineralization that, like I said, it historically produced 14% cobalt, 12% nickel, and you know, it has not seen the modern exploration since that production at the turn of the century. So it really provides Global Energy with a real interesting opportunity to unlock some value as we advance that asset. Now, in Idaho, we just recently acquired the Monument Peak project. It has about 69 claims, just under 1,400 acres. It's an exploration stage, very high-grade copper, silver, and gold project, and it covers 2 past-producing copper mines, Jackson and Hungry Hill. Past work on that project from the early 1900s all the way through the 1980s identified some very significant copper and silver mineralization along 3.5 kilometers of strike. A 2020 program that the vendor recently provided us information on had some very promising results, and you know, over 20% cobalt in copper in grab samples. You know, the average of all the grab samples were around 2.3% copper and 57 grams per ton of silver and 0.7 grams per ton of gold. So we're working with the vendor to plan for additional spring and summer reconnaissance exploration at the project, which will include an I-43-101 technical report, which is intended to provide some recommendations for an aggressive summer fall drill program there. I should mention as well that this presentation, much more in-depth version of that is available online. So if anybody wants to dig a little bit deeper into the projects and into the company, there's a lot more information available online. The Norway project, we're just in the process right now of closing on a strategic interest in the Rana nickel, copper, cobalt project, which includes the past producing Bruvan nickel mine. This is in northern Norway. and as part of that strategic interest of 10%, we're also acquiring a 1% royalty on the net smelter returns from the property as well. You know, we see this as a really exciting opportunity, and you know, with a limited number of quality nickel sulfide projects that are available worldwide, you know, Rana really represents one of the few drill-ready, low capex Class 1 nickel opportunities with strong mining and exploration upside. You know, and as I mentioned a little bit earlier, in addition to that further exploration and potential resource scaling, it has a strategic benefit of being in close proximity to and serving as a potential supply source for the European battery manufacturing hub in the Scandinavian peninsula. You know, there's Northvolt is very close to us. Freyr is very close to us. So you know, there's an emerging theme that's happening in that part of the world, and you know, given the abundance of clean energy, they're looking to be able to supply clean source of raw material, and you know, certainly we think that Rana can provide this in the future. Now we also hold 2 early stage nickel, copper, cobalt, PG exploration projects in Quebec. And we also have a past producing mine in Ontario, the Werner Lake project. And we're looking at ways right now to monetize these assets, and are in discussions with some industry peers to further de-risk and advance these projects. So I think they give some exposure to Canadian-based battery metal projects, you know, at a time when you know Canada is waking up to realize that given the tremendous natural resource wealth, the skilled workforce, and you know, an industry that is presently looking for opportunities, can certainly play a part in global electrification and manufacturing of batteries. Now, as mentioned, you know, partnership is something that's very much part of our corporate strategy, and we hold equity stakes in 2 companies. We have stake in ASX listed Marquee Resources, and as I said, the TSXV listed Electric Royalties. You know, and having equity exposure to other industry peers provides Global Energy shareholders exposure to elements like manganese and tin and lithium and graphite that we don't already have in our portfolio, but are certainly necessary for electrification. So, you know, we see that with so many great projects and exposure to an array of essential elements for the green revolution, that the company really benefits from this on multiple fronts. So, you know, this is we see this as a model that works. It's a strategy that we'll continue to execute on and build value for our shareholders. As a well-respected industry peer recently said, you know, raw materials are really the next EV battleground, and Global Energy recognizes that the time is now to shore up future supply of critical raw materials that are powering the electric revolution. You know, we see securing investment exposure to key critical metals powering this as a really generational opportunity. You know, trillions of dollars are being spent to boost the green economy, and it's only made possible through securing the raw materials that go into the battery supply chain. You know, we've identified and are advancing a pipeline of opportunities across the critical battery metals suite. You know, provides a way for our shareholders to really accelerate investment growth into the global market megatrend. We have a very strong positioning, a very strong management and supportive board and advisory team, you know, that are not only dedicated to the battery metal space, but you know, we also have that proven track record in building and selling companies. So Global is meeting the demand of a greener future by accelerating this supply exposure to battery metals and the battery metal supply chain. we believe that the time is now to be part of the electrification movement. So, I certainly invite you all to capture this opportunity with us and become a shareholder of our growing company. We think that there's a tremendous amount of opportunity, and this company is one that is primed for success. So I'll leave it at that for now. And should there be any questions, and I hope there are, I'm more than happy to answer any of those for you.
Sure. Thank you, everyone. Let's. Can you speak to the general approach to community investment, engaging in collaboration, partnership? So that sounds an awful lot like ESG. So thoughts on that?
Yeah, sure. Yeah, I think ESG is something that is come to the forefront within the mining space, and globally there's a lot more attention that's being placed on this. It's very much part of the reason why, for instance, the acquisition into Norway, where there's a clean, ample supply of hydroelectric energy, for instance, that's required for mining. So it provides a way for cleaner source. Again, obviously with Cobalt, and having spent the last 13, 14 years focused on the Cobalt space, there's a lot of attention with respect to mining in jurisdictions that use child labor and such. And we've been advocating for diversification for projects to be outside of that area for that very reason.
Given the dominance of the market of current and anticipated future supply of critical metals for electric vehicles by China, would you sell the company to Chinese interests? That's way down the line, but
yeah. I mean, I think the
irony built into that question.
Sorry, I missed you there, Campbell. Sorry.
Just there's a bit of irony built in that the Chinese might end up being interested in. So how do you handle that?
Yeah, I've spent a great deal of time in China and dealing with Chinese groups, and have put together offtakes in the past with them. I think that there's currently, I mean, the Chinese dominate a lot of these critical and rare metals, and it's because of the way that they've taken the approach of acquiring great swaths of land and taking investments into certain countries. That being said, I mean, we see there being an opportunity in a market more locally. I think that the US and Canada, as I said within the presentation, they're looking to collaborate and work with ways to build and secure supply chains in North America. Europe is doing the same thing within their supply chain. So I think there's ample opportunity and growing opportunity to build the company for regional supply here in North America.
Someone mentioned eSpring out of China.
Yes.
You have a relationship with them?
Yeah, so we had a relationship with eSpring and their EPC firm Bgrim in the past. There was a preliminary offtake with respect to the project in Australia, and that was really due to proximity of the Australian market to the Chinese group eSpring. eSpring is one of the main suppliers of cathode materials to Panasonic, who of course sells to Tesla.
How do you define a scalable nickel cobalt asset?
I think with our projects in Nevada, I'll start with that. We have a significant footprint in and around a past producing mine. There's been very little modern work done to advance that project, and we're going in there to be as first movers to really explore and define that. And given the size of the property, we think we can scale that up. And we take a project that's a little bit more advanced with our Australian asset with Millennium. And again, there's a kilometer and a half of the 3+ kilometer strike length has only been explored. We see there being a tremendous opportunity to build on that from that footprint. The same can be said with Rana in Norway and the Bruvan nickel mine. That was a past producing mine that produced a significant amount of nickel and cobalt and copper in the past. We think that there's a way to move that project forward very quickly and be part of the supply chain source in Europe there as well.
Okay. Any potential partner for Australian assets? Any current discussion with third parties?
Yes, we are having conversations with other peers in the industry who really like the opportunity that Australia presents, the land package there, and then the exploration upside. And again, it's a way for us to maintain our exposure to the upside of the project, but doing it without the dilution necessary to fund the exploration costs. So we see opportunities there. We recently monetized that with a small royalty sale to Electric Royalties, provided us with cash and equity in their company. So we'll look at other ways to continue to build value through partnership.
Thank you. Gabe?
Yeah, just to follow up on that, Mitchell, you're just talking about the sales to Electric Royalties. What was the sort of implied valuation?
Overall, it was around just under 2 million at that time. Fortunately for us, the price of electric has risen quite significantly since doing that deal. So we've had some appreciation from their climb in the market as well.
What's the current value of those shares?
Current value of the ones that we have in place at the moment, it's around $500,000 in shares, and that's not including the if they were to exercise their option to increase their royalty, because they do have an opportunity to increase the royalty on Millennium up another 1.5%.
Okay, and so just to finish the thought there, if they do increase the other 1.5%, what is the total sort of value of liquid shares you're going to have of Electric Royalties?
There's $1 million. It's $1.5 million Canadian. That would be then given to us in consideration. 25% of that can be paid in shares of Electric Royalty.
Got it. Okay, great. So you've got a lot of projects. You just finished a financing, or you're in the middle of one here now. Can you just talk to us about use of proceeds and where you're going to be spending the money?
Definitely, yeah. No, we're very pleased with how the financing is going. Raising this that will allow for us to really execute on that plan in Nevada. The majority of the funds are being spent to conduct this inaugural drill campaign. Again, 1,400 meters, about 8 holes to drill the Lovelock mine. We'll also be acquiring the Monument Peak, Chance Lake, and Emerald projects in Quebec as well. And then, of course, for some marketing and business development, working capital purposes. I think part of this is really to help build the exposure that the opportunity of global energy presents, and be able to showcase that and get this in front of as many investors and shareholders as possible.
Yeah, for sure. And then just in terms of the sort of the other assets that you have, what would be, in terms of priority of, in your mind, and either work being done, or I guess I would call it value creation to global energy shareholders? How would you rank them?
Sure. Yeah, I think the projects that we have in Nevada are right at the top right now. I think that there's the most upside is with Lovelock and Treasure Box, being in such a fantastic mining jurisdiction with very little work, that modern day work that's been done. So we'll be able to go in there and really really shape that project up. Monument Peak in Idaho, we're very excited to get on the ground there as well. I think that given the results from that 2020 field report that we announced a few weeks ago, we see some really interesting upside with the copper and silver mineralization there. Obviously copper's strong run, and we're very bullish on copper, and I think that this project really has a lot of merit as well.
Okay, great, thank you. Artie?
Thank you. If you find a partner for the Australian asset today, what would you do with the cash producing coming from that transaction? Will you consider only equity? I'm wondering if you spend that money on that asset, or would you transfer that to Nevada or the other assets?
Yeah, I mean, we're in very early discussions right now, so there's nothing concrete that's happened with those projects. But I think hypothetically, if we were to get an offer, I mean, we would certainly look at deploying that capital to advancing our efforts in the Nevada project, on the Nevada based projects. Again, I think it's for us, we would also want to see some equity position with so that we can share the upside for as Millennium and the Mount Isa projects develop as well.
Thank you. And what was the motivation of the previous owner to sell the Nevada assets?
Their focus is more on gold. They acquired the projects several years back, kind of at the height of one of Cobalt's runs in the market, and they just don't have they didn't have the bandwidth to be able to maintain and keep those projects, so they needed a partner to advance those efforts. Given our strong cobalt and battery metals focus, they approached us and wanted to see if we could partner with them on that.
And my last question is, for the potential partner for the Australian asset, what would attract the investors most about the asset itself?
I think it's there's an existing JORC resource on that, just over 3 million tons, very good cobalt grades, good copper grades. The jurisdiction that it's in is really second to none. I think a group that would look at this would seize the benefit of being able to explore and take the project from an exploration stage company to a development stage project very quickly. That ability to scale it up and further explore some of the asset is also very encouraging. But I think it's that ability to fast track that project is key. You know, we spent time drilling and exploring and confirming very high metallurgical recoveries for that project with a group called Cobalt Blue. And you know, I think that given the potential for it, it's certainly an attractive asset. You know, and again, you know, we want to maintain exposure to that for sure.
Thank you. Adam?
Thanks, Ernie. So just getting back to your assets, your newly acquired assets in Nevada, Lovelock and Treasure Box. What, you know, I understand the, you know, historic production, you know, small tonnage, very high grades. You know, where do you think you can take that, and what indications are there that there's that you can build significant tonnages at similar grades to what was seen historically? And then what would be the plan there for exploitation? Would it be to, you know, to concentrate on the similar high grade tonnage and to bag it, and where would it be? Would it be sent up to Sudbury for processing? Who could process that type of material today?
Perfect, thanks, Adam. Yeah, you know, I think for us, the opportunity there is to first define a resource. And you know, again, this is, you know, there was historically it was mined, it was done a long time ago. You know, but we need to go in there and do significant amount of exploration and confirmation work. And you know, I think that's really the exciting opportunity here is, you know, so you have something that was past producing with these high grades, and being able to go back in there now after all those years and explore those explore that further. With respect to processing and infrastructure, I mean, there's I think that would be something that we'd have to look at a little bit further down the road. That said, you know, there is infrastructure in that area for processing and refining, and you know, it warrants further investigation from I think that regional region to be able to start manufacturing and processing material. And there's a lot of emphasis being placed by the U.S. government to expand that type of that part of the sector as well. So you know, I think as we develop these projects, I think there'll be more opportunity for processing in proximity to that.
I'm sorry, and what kind of deposit? I apologize if you already said it. Are Lovelock and Treasure Box, as far as you can tell?
As far as we can tell, it's an IOCG system. We think that the main material is below the zone where the historic mining took place. They only be able to get down to about 100 feet, and there's a bit of a sulfide cap there that we'd like to enter into.
Okay, great. You certainly have a lot of projects here, and I assume that you guys are conceptually thinking, you know, 50+% of the net proceeds are going to be used in Nevada.
Yes, exactly. You know, the good thing about the projects that we have, although there are multiple of them, you know, the carrying costs for these are very low. So the opportunity here is to fund that development at Nevada, at Lovelock, put drills into the ground, and you know, we think we'll be able to turn some good results from that.
Great, and that mine closed turn of the century, you said?
Correct, yeah.
And that was due to low metal prices, or are they just technology at the time?
Just, yeah, it was technology at the time. I mean, they were, they technology at the time, and their ability to get any deeper. There was, it hit the water line, and they couldn't go past the 100-foot level.
Gotcha. And is that on patented ground or is that unpatented ground?
No, it's not patented. No.
And any thoughts there on what it's going to take to get an exploration permit?
We have permits in place already. So we're keen to start moving this forward very, very quickly.
Excellent. Thank you.
I should note too, our technical team has been in discussions with a number of groups for drilling the project, and because we have permits in hand, we think we can get in there very soon and start that program.
And just to follow up, I apologize if I missed it, but those properties, are they encumbered by existing royalties?
Yes, there is a royalty with the vending property on that.
Right. And that's the only royalty with the vendor?
Correct. Yeah.
Can you tell us what that royalty is?
It's 1.5%. I'd have to 1.5%. There's some math that goes with it depending on pricing of copper and gold, but 1.5% and buyback for $1 million, I believe.
A full buyback?
Sorry, 1% of the 1.5% buyback, 50% of the buyback. Sorry.
50%. Great, thank you.
Mm-hmm.
All right. Thank you everyone for tuning in, for your great questions, and Mitch, you've got your work cut out for you. Got a big portfolio, so looking forward to seeing the value creation and monetization where it's in everyone's best interest. With that, when you log out, please share your feedback, and leave it with you, Mitch, for a closing to close us, but build in there why we should buy it now. What's the immediacy in May here?
Yeah, I mean, we're primed. We're ready to go. We think that the opportunity is certainly now. You know, our sleeves are rolled up, and we're getting ready for a very exciting spring, summer, fall exploration program at multiple fronts. There's going to be we think some further monetization opportunities with assets that are non-core or just not getting the market attention that we think they deserve. And you know, there's a financing that's underway right now at 25 cents with a full warrant at 30. So it gives new incoming shareholders a real opportunity to play this mega trend opportunity that is electrification.
Great. Thanks, everybody.
Thank you, guys. Appreciate it.
Bye.
Thank you.